Hello everyone, welcome back to my channel. So this video marks the beginning of the week 61st in this Road to 100k Realized Return Challenge, and the week started not in a positive mood, which is, it was somewhat expected after the strong gains posted last week. Some sort of a pullback was to be expected, and apparently the market is not digesting very well some updates on the economic and on the political front, especially when it comes to the fact that now there are apparently a little bit more of a concern of a growing risk rather of a government shutdown, which is which has been a somewhat regular occurrence over the past couple of years. And of course, if this happens, there may be some issues from of course, from the government perspective, but also on the economic front. And also because over the weekend, US President Donald Trump announced that the H-1B visas, which are the visas that are applicable to highly skilled migrants that come to the US for work, the fees, annual fee that applies to this kind of visas will be raised up to $100,000. And because this is a dramatic increase in the price of or the fees associated with these visas, there is already some fear that this is going to affect significantly the bottom line of several key companies in the American economy. And there's a very good article here in the Times of India .com, and basically explains here which are the employees that are more dependent on this kind of visas, or rather on the workers which benefit from these visas to be able to work in the United States. And as you can see here, between Amazon, Microsoft, Meta, Apple, Google, these are some of the Magnificent Seven. And so because of that, there is also some fear that these increased fees will also affect the bottom line of these companies. And yeah, that is also one of the reasons why the market sentiment today is not being positive. And so given the fact that we are a bit restricted with the trading that we can do, we have currently 1100 shares of IWM. There was very little that we could do and other than simply selling calls on the price of acquisition, 244. But as you can see here, we were not able to trade options or calls expiring today because by the time trading commenced today, the premiums offered by these options were very little, were around 10 to 9 cents a piece. And given that situation, the premium was far too low to be worthwhile trading. And of course, given the fact that we are trading 0DTE options, the risk of going lower on the option chain using a lower strike price was far too significant, and the risk of having to lock in a capital loss was significant. And so we decided not to go for that. And so we decided to stretch our maturity to 2 days. So these are options expiring tomorrow with a 244 strike price. So it's the cost of acquisition, and we still collected 32 cents. Uh, yeah, 32 cents a piece for each of those. Yep. And also we used our buying power, our remaining buying power, to sell a put on a 241 strike price on IWM. We collected 30 cents on that. So all in all, this was of course not the ideal situation for us, but this situation of course was bound to happen, especially after the very strong week we had last week. This kind of situation sooner or later would have to happen. Also because as you trade zero DT options, you are forced to trade options on a strike with a strike price very close to the stock price, because the option chains are less deep, of course, for obvious reasons, than the option chains on longer maturities. And so yeah, that is somewhat expected. So we have to basically ride this situation out, and hopefully when the market recover from this lull, yeah, we'll be able to continue our cadence of highly profitable premiums. But yeah, after this put expires, or is basically close to expiring, worthless, there is very little that we could do. We have not enough buying power to sell puts on on the triple Qs, QQQ, and so we could also go for the ARKK, but being exposed to such a volatile ETF for an entire week, yeah, is a risky proposition, and this is something that I'm not very comfortable with, especially because yeah, the premiums are very good, but still we have to be very careful with this. And on the other hand, if you look here at the XLF, the premiums are very little because of this ETF has very little volatility, and so probably we will be better off just letting this one expiring worthless at the end of the day, and then trade again the next day a new fresh 0DT put on this. But we'll wait and see what happens. Yeah, and for the time being, this is all. Feel free to leave your comments in the comment section down below, and I'm also available on LinkedIn in case you need to ask me any questions about the challenge. And of course, feel free to like the video and subscribe to the channel. And we will reconvene at the end of the week, next weekend, to see how the week panned out. And yeah, I'll see you there.